Ladies and gentlemen, good day and welcome to the Q3 FY22 conference call of JK Lakshmi Cement Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, Mr. Agarwal.
Thank you, Janice. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q3 FY22 call of JK Lakshmi Cement. I need to highlight that JK Lakshmi Cement is also the holding company of Udaipur Cement Works Limited, and therefore the call is also open for discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Dr. Shailendra Choksi, Whole-Time Director, and Mr. Sudhir Bidkar, CFO of JK Lakshmi Cement. I would like to mention on behalf of JK Lakshmi Cement and its management that certain statements that may be made or discussed on the conference call may be forward-looking statements related to future developments and current performance. These statements are subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. JK Lakshmi Cement Limited and the management of the company assumes no obligation to update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the management of JK Lakshmi Cement for their opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Thank you, Vaibhav, and good afternoon, ladies and gentlemen. This is Sudhir Bidkar, CFO JK Lakshmi, along with my colleague Dr. Shailendra Choksi, Full-Time Director, welcoming you for Q3 FY22 on call. We had the board meeting yesterday. You would have all seen the results. So nothing much to add. Throw the floor open for question answer so that we have more questions and we are able to clear whatever clarification or doubts you have with regard to the results or our view. Over to the floor is now open for question answer, please.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Good evening. First of all, could you share the clinker production number and for the quarter, both standalone and console?
What you want, clinker?
Clinker production number for this quarter, standalone and console.
Yeah, the note on clinker production in this quarter was for JK Lakshmi was 17.38 lakh tons.
Okay.
Lakshmi Cement, and as far as UCWL is concerned, it was 3.08 lakh tons.
0.08 lakh tons. Okay. And sir, this RMC and non-cement revenues?
Approximately 100 crores this quarter.
This is what, RMC or total non-cement revenues?
Total non-cement revenue, non-cement.
Okay, and RMC would be how much in this, sir?
RMC would be 42 crores.
Okay, okay. And coming to Udaipur Cement, the capex, could you explain what is the progress and on the funding of the same?
Yeah, as far as UCWL is concerned, this project is of, as we mentioned last time, is of 1.5 million clinker and 2.5 million tons of cement.
Right.
So, while the clinkerization entire will happen at Udaipur, one grinding unit of 1 million will also happen at Udaipur. That is, we'll take that as the first phase.
Mm-hmm.
And the second phase will involve a split location grinding unit of 1.5 million tons in Rajasthan. So,
okay.
The first phase we have taken up for implementation. and out of that 1650, this will cost about close to 1250 crores, and the 400 we have kept for the split location grinding unit. So most of the long delivery items have already been ordered, and we have already initiated action for seeking the government clearance and clearance from Rajasthan government also. Public hearing is completed. And the approval from airport authority the plant being in proximity to the Udaipur airport is awaited. And it's already started. That is where we stand now.
And on the funding aspect?
As far as funding is concerned, this will out of 11, as we mentioned last time, out of 1650 crores of project, this will be funded through a debt equity of 2:1. Means 550 will be promoters' contribution and 1100 crores will be the loan. That loan amount is 850 crores. So the financial closure has happened now. We have tied up the entire loan, and UCWL in their board meeting held on 27th of January has already approved the funding of that 850 crores.
Right.
So we have been able to get very fine rates on a 15-year loans. We have tied up with the banks, and it will have a 4 years moratorium and 11 years. And out of the 4 years, 3 years may go in implementation. Those it could be shorter, and there will be 1 year moratorium after the COD, and the 11 years will depend on a ballooning basis.
And this rights issue, is any plans on that?
We will come back to the board in the month of May when we announce the results with the exact timing and the terms of the rights.
Great, sir. And last, if you could throw some thought on the fuel price, how much is per kilocal costing in the December quarter or per ton costing, and how is that number in current quarter?
As far as the fuel cost is concerned, we saw the impact of the escalation in fuel prices also impacted us because we have been also, though that impact is not that much because of the old inventory, but still that impact is there. In this quarter, our blended fuel cost was 9,500 rupees per ton, and 6,600 in the corresponding quarter, and about 8,350 in the preceding quarter. Currently, it is over 10,000. Present fuel cost is concerned.
Great, sir. I'll come back and thank you.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. The first question is, you can throw some light on the demand because that's something looks like not improving. Even January looks tough for few players. So if you can throw some light.
You want some light on the coming quarter, right?
After the coming quarter, if you can throw some light why the demand is not improving in the last 4-5 months, and what's your outlook on the demand, how one should assume going forward? That's my first question. The second question is, if I look at your profitability, and especially the EBITDA per ton, then the whole industry was touching 1,400, 1,350. The gap.
Your voice is speaking. Can you a bit louder?
Sure, sir. So what I'm trying to understand from you on the profitability, the EBITDA per ton for us, at the peak when the industry was doing 1,400, we were doing 900, and when the industry is down closer to, let's say, 1,200, 1,250, we are down to 600. Now, going forward, if you can help us guide that for FY23, what's the sustainable EBITDA per ton one should assume? Should we go back to 700, 750, which we used to do earlier? That should be the sustainable number. That's my second question. Thank you, sir.
Well, as far as first question is concerned, I think the demand got impacted mostly in the month of November. So 1 month alone was fairly bad, and that was because of the unseasonal rains and then re-emergence of corona in the north and Gujarat. So the demand slipped. Second reason why our volume went down was we had that strike of transportation in the east. So that affected our overall volume. But as far as demand is concerned, the third quarter, I think most of us suffered because of the very poor demand in November and first half of December. But otherwise, October was good and second half of December was good. And subsequently, in the month of January, we saw a good run on the demand. And I'm quite bullish for the demand continuing the same way in the month of February and March. So I think the January-March quarter should see a good improvement over the quarter October to December.
Now, as far as the second part of the question is concerned, which is regarding the EBITDA per ton going forward, so we expect it to be in excess of over 850 rupees per ton. Depending on that will be subject to two major things. One, how much fuel prices further peak up or settle down or soften, and two, our ability to pass on the cost increase onto the consumer, which will be a function of the demand in various markets where we serve. So we are quite hopeful it should be in excess of 850, close to 900 going forward.
Just to supplement Mr. Bitkar, you see, in the last quarter, because of the very low demand, in 1.5 month period of the quarter, our ability to push prices was not there. And then, most of the companies refrained from making any attempt because of the, continuing the very cold weather in the entire north and partly in west. Now, looking at the current demand, one is hopeful that one would be able to pass on some of these increases in the cost of the input which has taken place. And if that happens, then obviously our EBITDA, that correction should take place.
Got it, sir. Thank you very much. I'll come back.
Thank you.
Thank you. Participants, if you wish to ask a question, please press star then 1. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, good afternoon.
Good afternoon.
So, just on the cost side, like the WHRS, I believe, was about to be commissioned in December. So could you just confirm when did it get commissioned and also guide us to the cost savings that you expect to get in the FY23 from this?
This trial runs have already commenced therein. Some last minute hooking is required, but otherwise that has already been completed as far as the waste heat recovery is concerned. And there we expect to generate, as we mentioned last time also, savings in excess of about in the vicinity of about 22 to 25 crores.
Okay, sure. And could you also just share the debt number?
Yeah, debt number, we as far as standalone JK Lakshmi is concerned, as of 31st December, we have total debt of 1,078 crores, and net of cash, it is 414 crores only. And if one were to talk of the consolidated debt, it is 1634, and net debt of 922 after taking into account cash and bank balance of 700 crores on a consolidated basis.
Got it. And also, could you share the trade mix in the quarter?
We had the total trade of about 54% in this current year. 54% is trade and 46 non-trade.
In Q3, right?
Overall in the current year.
In the 9 months period.
Okay, in 9 months. Okay. Sure. That's all. Thank you.
Thank you.
Thank you. Participants, to ask a question, please press star then one. The next question is from the line of Uttam Kumar from Axis Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, during the month of October, there are 70 days, there were no production. So how much volume we would have lost because of that?
Because of this transporter strike, it was there for 30 days. It started around 19th of October, 18th of September, and continued up to 18th of October. So it was, the impact was about 18 days for the current quarter. As far as October, December is concerned, that too at about our Durg plant only. So the impact was about 110,000, about 1 lakh, you can say broadly.
Okay. Okay. And sir, any price increase that we have taken in the month of January in our respective markets?
We have taken a minor increase of about 5 rupees a bag.
Okay. This is in all markets where you operate, east, west, and north also.
Yeah, you can say that.
Okay. And sir, how has been our premium cement sale during this quarter out of the trade sales?
We are doing more than 25% on
okay,
all markets combined.
Okay, so it has gone down because last quarter it was around 30%, I think.
I think 30% was excluding the east, where our premium cement is lesser. But now I'm talking the total overall is about 25%.
Okay, and sir,
expecting a further increase there.
Okay, and sir, my last question: how has been our fuel mix during this quarter?
Sorry?
Fuel mix during this quarter? Fuel mix was basically we were using about 60% pet coke, 30% coal, and 10% other biomass, etc.
Okay, sir. That's all. Okay, sir. That's all from my side, and all the best to you.
Thank you.
Thank you.
Thank you. Reminder to the participants, if you have a question, please press star then one. The next question is from the line of Mangesh Padam from Nirmal Bang. Please go ahead.
Hi. Good afternoon, sir.
Good afternoon.
Sir, a couple of questions from my side. So firstly, on the fuel prices. So last time around, I think you have mentioned that we have fuel till Jan and Feb. So the impact would be limited. So was that basically the volume perspective, or even the price was locked? That is the first question.
That was volume. Price was obviously we were procuring as and when or based on the current market price only. But yes, in the current quarter, our price was what we hit in the P&L was 9,500 rupees.
Okay. And sir, if you can give that the fuel price, the fuel mix that you gave, if it's possible, if you can give it for north and east, it would be really good.
Sorry, come again.
The fuel mix for north and eastern operations.
We generally don't give plant wise, but generally, just for the information of you and everyone, coal consumption is more in east because of their proximity, one, and two, the linkage which they have. But generally, we don't share it region-wise. Broadly, I've given for the company as a whole 60, 30, 10.
Okay, sir. Secondly, the cost item which is purchase of traded goods is, I think, the highest that we have reported.
Sorry, can you repeat your question?
So the purchase of traded goods, the cost item in the P&L, is the highest that we have reported, almost 120 crores. So is it largely because of the clinker purchases that we have to do for the northern operation?
It is also what we are also at times procuring, getting clinker from Udaipur and getting it grounded at our locations in Gujarat to enable them to meet their Gujarat needs. So that
okay. So intercompany is also there.
Yeah.
It's actually a part of our synergistic operation that we resort to the traded goods.
So overall, when we report the consolidated numbers, those get eliminated, obviously.
Okay. But sir, I just wanted to understand what would be the clinker purchases that you will need for this year?
We don't need any clinker purchases per se. It is more to take care of our logistic improvement, cost improvement or cost reduction, so as to say. Now, if you can very well understand, if Udaipur was to sell in Gujarat, instead of they transporting the entire cement from their plant to Gujarat, it makes better sense for them to transfer only clinker, which is only 70% of the cement, and then use grinding facility, our grinding facility where the fly ash is available, and then save on 30% of the logistic cost. So that is how we are doing. Similarly, if we were to sell something in the closer to their plant, we also procure from them. So that is how the overall logistic cost rationalization is happening and market rationalization. So there is nothing called a requirement of clinker to be bought as such, because our grinding capacity and clinker would be good enough to take care of our demand requirement in our region.
Understood. So given the current clinker capacities that we have, what is the maximum cement production we can do, sir, for both? So we would be doing somewhere around 10 to 10.5 million ton this year. Where can it maximize?
It can certainly go maybe 12 plus, close to about.
Okay, but that assumes clinker from UCW, right? Much higher amount of clinker from UCW.
Yeah, the combined clinker and the combined cement that can be made.
Yeah.
Okay. Sir, if I can just ask a last question. So this is any consultancy charges that we have be paid this time around, and what it will be for this year?
Sorry, come again?
Any charges to consultants?
No, that is long over. Nothing has been paid during the year to any external consultant.
Okay, that's it, sir. Thanks a lot.
Thank you.
Thank you. Participants, to ask a question, please press star then 1. The next question is from the line of Sanjeev Kumar Singh from Motilal Oswal Financial Services. Please go ahead.
Thanks for the opportunity, sir. Sir, I want to understand about cement prices and your realization. So in last 2 quarters, I believe that realization for the company has gone up by around 200 rupees per ton. 2Q also there was an impact of lower prices. 3Q also we heard lower prices in the east region. So what has contributed to this realization growth?
No, in the last quarter also there was some price increases in some of the markets. So it was not that there was no price increase that took place. But you could not take a uniform price increase, number 1. Number 2, we could do some improvement in our logistic in terms of direct sale, some higher percentage of trade, and so on, and there we could garner a higher price.
Okay.
So it's a mix of efficiency improvement and some price increase in place.
Okay, so it's also because there have been improvement in trade thing.
Yeah, in the improvement in trade sale as well as improvement in the direct dispatches to the party.
And in this quarter, can you give some sense how regional prices moved in the east, west, and south and north region where you are operating?
Well, in east, in Odisha, we have seen a price increase of about 10 rupees in the month of January, and we are expecting a further increase. In Chhattisgarh also, we are expecting a price increase of about 8 to 10 rupees a bag. Other states of quantities are very mild comment there. These 2 states take about 70% of our production. If I come to northwest, we have an increase of about 5 rupees in the northern market, and I expect a price increase of further about 5 to 10 rupees between February and March.
Okay. Sir, I was asking about price movement in 3Q, the quarter which has gone by.
Yeah, I think I told you about 3 that we have seen some price increases in the east, some in about 5 rupees in north, and about 7 to 8 rupees a bag increase in Punjab.
Okay. Okay, sir. Got it. Also, can you give consolidated sales volume?
Sorry?
Consolidated volume?
For this quarter, we had separately mentioned about 24.59 for JK Lakshmi, including clinker, and 5.59 for Udaipur. If one were to eliminate the inter-unit, then on a consolidated basis, we have clocked 26.14 lakh tons, which includes 23.43 of cement and 2.71 of clinker.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ashish Kejriwal from Centrum Broking. Please go ahead.
Yeah, hi. Thanks for the opportunity. So this question is on the capex which we are doing of UCWL.
Right.
Able to share the timeline for that as well as how the capex is going to shape in FY23 and 24?
Concern, we may be doing close to about 200 crores in the current. Forward, maybe 1,000 crores will get spent in FY23.
Okay. And when our grinding unit is...
Balance in FY24.
And when our grinding unit as well as clinker unit is going to be commissioned?
Yeah, you're right.
Sorry, I didn't get to it.
Yeah, we expect the first phase to get commissioned sometime by October 23, and immediately thereafter, 6 months later, depending on when we form up the second phase 2 of that, that will happen maybe 6 to 9 months thereafter.
Okay, thank you. And the second question is about the price increase. Is it possible to share as compared to Q3 where our price stands now after what we have increased in January?
No, after January we have not only second day, third day of the month. So, we have a very clear visibility right now, but I expect the price increase will take place sooner or later.
My question was till now, that is the price increase which we have taken in Jan versus Q3 average we stand now.
I think I answered in response to the previous question that we have taken a price increase of 5 rupees till now.
That is from December exit price, right?
Yeah.
So what was the December exit price as compared to Q3 average?
That I'll have to just see. I'll be on this.
Okay. Thank you.
Thank you. The next question is from the line of Nishan Bagrecha from InCred Capital. Please go ahead.
Yeah. Thank you for the opportunity. Just a follow-up question from the previous participant. So as you have mentioned that you have commercialized the 10 megawatt WHR at Siroi plant. So is there any further plan of WHR going ahead?
No, as of now, whatever maximum based on the gases which get emitted from the kiln is concerned, we will not have any additional WHR at Siroi. But certainly when we do additional clinker line at Udaipur, it will have a commensurate 6-7 megawatt of the waste heat recovery at Udaipur. It is linked to the kiln. If only when we are expanding the kiln or increasing its capacity, then based on the gases emitted, you try to capture them and create the capacity for waste heat recovery. In our case, out of the 3 kilns which we had at Siroi, we were having waste heat recovery on 2 of the kilns. Third, we were using for drying fly ash. Now, that we have now converted and put up a separate dryer for drying the fly ash, and now getting this waste heat recovery at the third kiln also. So this is the maximum we can go as far as the waste heat is concerned at both Durg and Siroi. Udaipur, as I mentioned, will add another waste heat recovery during the clinkerization line.
So this would be 5 megawatt, right?
6 to 7 megawatt.
Okay. And anything on the solar side?
Solar, we already have. We had already had 1 10 megawatt at Udaipur. We have in November also commissioned an additional 5 megawatt solar power. And we also have one solar power in Jodhpur, which we were earlier wheeling. We are trying to see if we can use that for our Siroi plant, which is 6 megawatt. Then some small solar plants are already there, 7-8 megawatt each at Siroi and Durg.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you. Sir, the first, just wanted to reconfirm the numbers in terms of capex for the UCWL. You said that 200 crore will be spent in FY22 and 1,000 crore in FY23.
Yeah, balance in the FY22.
Okay. And till now in 9 months, how much capex, overall capex we have done, and how much to be done in the fourth quarter?
You are talking of the UCW or JK Lakshmi?
JK Lakshmi. Both, even for UCW, how much we have done, and for JK Lakshmi, how much till now we have done, and how much to be done in the fourth quarter?
Out of 200 crores which we are planning for UCW first, 100 crores has happened already up to December, and 100 crores is happening in the current quarter. That is as far as UCW is concerned. Now, as regards JK Lakshmi, the only project which is left is the waste heat recovery. That has broadly been commissioned. So we have already done in the current year about 70 crores on that project, plus around 30 crores normal capex. So 100 capex we have done. Normal capex is 30. Balance about 20 to 25 crores of capex. Normal capital expenditure could happen in the fourth quarter, as far as JK Lakshmi is concerned.
Okay, got it. Sir, the other question is in terms of the trade mix you share for the 9 months. So if possible, if you can share for the third quarter. And the related question is, sir, for last so many years, why our non-trade or maybe a trade sales is only 54-55%. When can we see that inching up to 65% plus? Because even if the larger companies, if you look at Ultratech also, despite so much capacity, they are able to have a 65% plus kind of a trade mix. And so that's the structural thing I wanted to understand.
One is constantly making attempt to improve this trade sale. And so I think everybody's aim is to take to 60-65% is what one is attempting. And as far as third quarter is concerned, it was in the same line of about 54%.
Okay. And sir, what was the lead distance for this quarter, sir?
It was, I think, about 400 kilometers.
Okay. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1. Please note this is the final reminder for questions, and no further reminders will be placed after this. The next question is from the line of Sunil Kothari from Centrum Broking. Please go ahead.
Thank you. Actually, my questions have been answered. Thank you so much.
Wherever there are no questions, we can end the call.
So we proceed to the next question. Is from the line of Uttam Kumar Srimal from Axis Securities. Please go ahead.
Yeah, sir, one more follow-up question. So what has been our railroad mix during this quarter?
Railroad, we see as far as east is concerned, we don't have a railway siding, so 100% is as far as that is concerned is on the road. And here in north, we mostly do by road, but at times we always have.
It's about 24-25% rail.
Okay, sir. Okay, yeah. That's all from my side. Thank you, sir.
Thank you, sir.
Thank you. The next question is from the line of Rakesh Shah from ICICI Securities. Please go ahead.
Sir, my question is with regards to your cost of production. How much cost increase do we expect in the fourth quarter? As you have already said, we have already utilized the full low-cost fuel inventory till the month of January and Feb. So just wanted some your perspective on the cost.
This quarter we had at 9,500. It may go up by about 800 to 1,000 rupees per ton as far as fuel cost is concerned, and that will have the impact on the cost of production.
So does that answer your question, Mr. Shah?
Yeah, that's it. Yeah, thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, sir, even in this quarter, as you said, now the demand is looking improving. So for full quarter, because previously we said that in the second half we were looking at 8% volume growth versus the last second half. But now, do we think that we can do a growth YOY in the fourth quarter also?
Yeah. We will certainly do a YOY growth in the fourth quarter. I mean, until something like a pandemic recur or something. Otherwise, in normal circumstances, we expect that we will stock a growth in the fourth quarter also.
Okay, because last year fourth quarter was exceptionally good, so that's what I was trying to understand.
Yeah, we are hopeful.
Okay, and then sir, when we said 850 to 900 EBITDA per, so that to start from the first quarter of next year, because as you said, the cost would be inching up in this quarter also. So this quarter also we can see a lower number on EBITDA per ton.
Yeah, our endeavor would be to clock that number in the fourth quarter as well. Remains to be seen whether we are able to pass on full impact, but surely, for sure, we should be able to be in that range in the FY23.
Okay. Thank you and all the best.
Surely looks to be better than the Q3 because there will be an impact on the volume as well.
True. Thank you, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Himanshu Yadav from Edelweiss Wealth. Please go ahead.
Thank you, sir, for the opportunity. My other questions have been answered. Could you just repeat the standalone sales for the production numbers for clinker and cement?
Standalone number for this cement and clinker in this quarter for JK Lakshmi was 22.26 was the cement sales and 2.33 clinker sales, total 24.59.
Thank you, sir. That's it.
Thank you. The next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead. Mr. Keshav Lahoti, your line is unmuted. Please go ahead with your question, sir.
Hello.
As there is no response, we take...
Hello.
Yes, sir, you may go ahead. You're audible now.
Yeah. Just wanted to check out something with you. As you mentioned that prices have increased by rupees 5 in Jan, and you expect this 5 to 10 rupees combined.
Mr. Lahoti, I'm so sorry to interrupt, but your audio is breaking up, sir. We are unable to hear you well.
Is it better now?
Yes, sir. Please go ahead.
Yeah, sir. I just have a question. As you mentioned that prices have increased by 5 in Jan, and you expect the prices to further go up by rupees 5 to 10 in Feb and March, don't you think we need a bigger price hike, as there's a fuel cost pressure and also there's a pressure in freight cost because of Chhattisgarh strike, the transporter rate has increased. What is your take on this?
Yeah, of course, there is a need for a higher increase. There's no denial of the fact. But one is looking at how things shape up because, even now once the demand really picks up in the first week after 5th of February, then I think we'll have a better visibility as to what is the likelihood of a higher price increase than that. 5 to 10 rupees more on the conservative side.
Oh, okay. Understood. That's it.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Thanks for the opportunity. Sir, just one clarification. When you say that EBITDA expectation of 850 to 900, is that standalone you're talking about or console number?
Sorry, come again.
When you say EBITDA per ton expectation of 850-900 rupees, are you talking about standalone numbers or console numbers? Standalone. And when you talked about 1,000 rupees inflation in realized cost price, realized cost of fuel. So on a per ton basis, that would mean around 100-120 rupees of cement.
Yes.
80 to 85 rupees.
Nearly 100 rupees.
80 rupees.
80 rupees. Right. And any other cost inflation which we can expect in any other line item?
This is because of this fuel cost increase, the cascading impact on one, the power cost, two, the diesel price and the freight is always there, plus the blended cost of the raw materials. Some impact could be there, but major one is what we have told about the fuel cost.
Sure, sir. These are my questions. Thank you.
Yeah.
Thank you. We take the last question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Talking on the price increases in fourth quarter, what was the quantum of price increase so far in the eastern markets?
Well, as I mentioned earlier, in Odisha we have been able to take a higher price increase, while in case of Chhattisgarh we have taken a price increase of 5 rupees and another increase of about 10 rupees on the anvil.
Sorry, 10 rupees on an average you're saying?
No, it's just about to take place. We have taken.
No, your voice is not audible, sir.
We have taken that increase of 10 rupees in Chhattisgarh only recently, a couple of days back. So let's hope it stabilizes.
Okay, so on over and above the first 5 rupees, another 10 rupees hike in this month.
Yes, that's what we are expecting.
Okay. And if you would have the numbers for the non-cement revenue for the September quarter?
Sorry?
Non-cement revenues and RMC revenues for September quarter, if you would have it handy.
92 crores as against 100 this quarter.
92. And RMC was how much in that?
37.
Okay, sir. That's all from my end. Thank you, sir.
Okay, thank you, Rajesh.
Thank you, ladies and gentlemen. That was the last question for today. I would now like to hand the conference over to Mr. Vaibhav Agarwal for his closing comments. Thank you, and over to you, sir.
Thank you, Janice. On behalf of Phillip Capital India Private Limited, I would like to thank the manager, JK Lakshmi Cement, for the call, and many thanks to the partner for joining the call. Janice, you may now conclude the call. Thank you very much, sir.
Thank you, everyone.
Thank you all the participants, and thank you, Vaibhav.
Thank you.
Most welcome, sir.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you all for joining. You may now disconnect your line.